silver analyst Ted Butler is absolutely correct in how high the next price rally in silver and gold will go is entirely dependent on whether the large 8 traders, 4 and 8 traders, decide to go back on the short side. If they don't decide to go back on the short side, and the signs are that they're not going to, then we're going to see a price rally for the ages.
This week's special with Miles Franklin Precious Metal Investments. 2021 Silver Krugerrands for only $365 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today, a new guest, Ed Steer. He is a precious metal analyst. He's the director of the Gold Antitrust Action Committee and the author of Ed Steer's Gold and Silver Digest. He's with us today from Merritt, British Columbia. Ed, thank you so much for joining us today.
Entirely my pleasure.
One of the first topics I'd like to discuss today is the precious metal markets, but more in particular silver. Now, we've heard a lot about kind of the silver story, and our viewers are very familiar with that. And you've recently said that, silver has the potential to really skyrocket in price. And this is what we've been hearing for so long, but it hasn't really happened yet. So I would like your perspective on what are some of the bullish fundamentals, and also why have we not seen this skyrocket in price?
Well, Elijah, as you know, I've been following the work of silver analyst Ted Butler for more than almost 15, 20 years now, and I pretty much focus in on his work. And silver, of course, and gold and all the precious metals in particular, and all the commodities in general have been suppressed in price for the last 50 years, ever since we got off the gold standard. But silver is special, and as Ted has pointed out, and he correctly so, the fundamentals for silver, as far as price, supply demand are concerned, are just off the charts bullish. The demand is there, the supply is limited. There's all kinds of signs, especially in the retail market and the wholesale market. If you go to buy something, there's long lead times for just about anything you wish to buy. So from a retail point of view, and also from a wholesale point of view, if you look at the spread trades the spreads in the COMEX futures markets are very tight. There just isn't a lot out there, and it's hard to come by. And the fundamentals are just wildly bullish. And the simple reason that the prices aren't reflecting reality out there is the fact that four or less traders in the COMEX futures market are sitting on the price and prepared to go short on every rally in order to kill the price. So that's why we see silver today at $23 or $24, when it should be, in my estimation, 10 times that price, at least 5 times that price. So this has nothing to do with supply and demand, but everything that's going on in the COMEX futures market.
Definitely. And this question about precious metal manipulation is highly debated. And if people are interested in learning more, they can look in the description for a playlist we've put on that topic. But I'd like to get your perspective on this, because there are different perspectives on this. Some people say that the shorts that we see, for example, in the market are merely hedges of clients' long positions that the banks have. Why do you believe that the precious metal prices, especially silver, are suppressed?
Well, very simple is the fact that these 4 traders aren't hedging positions for their clients; they're doing it in their own accounts. And there's no way that anybody would be short this metal. If you take a look at all the other categories in the Commitment of Traders report, I don't care whether you're looking at gold, silver, platinum, or palladium, all 4 precious metals, and I do the report every week on Friday, is that everybody else is net long against them, except the small commercial trade. Even the smaller commercial traders, other than the big 8 traders, are all net long against the rest of the commercial traders. And you go into the small traders and the other reportables and the non-reportables, everybody is massively net long against these 8 traders. And it's been this way now for 25, 30, 40 years in the case of silver. And it's no longer clients. It's basically the big investment houses and the banks. Ted says it's just basically banks that are left on the short side now, and we've sort of narrowed it down to three different banks. There would be Citigroup, HSBC, and maybe Barclays as well. Ted figures that after last March of 2020, J.P. Morgan was able to extricate itself from its short position, and they're no longer a factor in the market after they got fined, what was it, $1 billion for rigging the precious metals market. So, no, these are all commercial traders, and they're all banks. They're not doing this for their client. They're doing it for their own account.
And what kind of impact, in your perspective, is this suppression having on the price? Where would gold and silver be if they weren't being suppressed in your mind?
Well, let's put it this way. Nobody out there knows what the true free market price of any of the precious metals are right now, whether it be gold, silver, platinum, or palladium, because they're not allowed to trade freely. I mean, what gold was set at $20 an ounce way back when. That was a fixed exchange rate, and then they put it to 35, and now we're looking at gold at $1,800 or $1,700 an ounce, whatever it is. But we don't know what the true free market price is because it has never been allowed to trade freely. That goes for silver as well. So where the price is going, if the big four shorts weren't sitting on their respective prices, is anybody's guess. In a short covering rally by the big four shorts, I can see prices of gold for 5 or 6 times what they are now, and silver 10 times what they are now, if not more. I know that Ted has put fantastic numbers on it. If for a price spike in silver of like $400 or $500, wouldn't stay there forever, mind you, but the short covering rally that would drive it there would take it there, and of course it would fall back at some point. But the price on a short covering rally in the COMEX futures market would make your eyes glaze over.
And how long, in your mind, do you believe this manipulation can keep going?
It's been going on now for 50 years, ever since we went off the gold standard in 71. And it's become more and more intensified over the last 20 odd years. But it's been there for, according to Ted, who's been on doing this for 35 years now, for as long as he's been on it. And how long it will last will entirely depend upon what the big four short traders do. Are they going to sit there? Are they going to go short the next rally? That's the big question that Ted has been mentioning now for over a year. How high the price goes depends entirely on what these big four banks do when the prices are allowed to rally next time. Are they going to go back on the short side? And if they do, we'll have a decent rally, but it'll get capped again, just the same old, same old. But if they decide to put their hands in their pockets and say, okay, fine, we've already, we're not going to play this game anymore, and we're going to take our lumps and buy our way out of this thing, man, it's going to be a short covering rally for the ages. And like I said, just a minute or so ago, we're going to see prices rise to levels that, frankly, we're not going to be able to believe.
Now, how does this manipulation impact investors and investing decisions? You know, obviously we can't give any financial advice, but I can see both arguments, right? That, well, why would we invest in a manipulated market, right? But then also the other argument is, well, if it is being suppressed, then we can buy at very low prices. So your perspective on that, considering the manipulation while investing?
Elijah, both cases have some merit to them. For me personally, I'm all in. Every nickel that I own, I have invested in my retirement savings plan and my tax-free savings account and my personal account. Every nickel of it is in precious metals, and I hold a lot of physical as well. So I'm a big believer in the fact that someday, and I've been waiting a long time, and others have been waiting longer than that this manipulation will end, and we want to be positioned for it. And for people who believe that, well, it's never going to end, and so I'm not going to get involved, well, they have their point of view. So, everybody is dug in on one side of this thing or the other. And but the fact of the matter is that even if you believe it's not going to end, it's still prudent in this day and age, looking at the world economy and world events as they are today, to have some portion of your stock portfolio in the precious metals. You don't have to go too far in the business pages this week or the last couple of days to see a couple of heavy hitters saying that you should have at least 10% of your portfolio in precious metals. So even if you're a denier and say, why should I invest, you still should be invested, have a certain amount of your portfolio invested in precious metals.
I find it interesting how you say, you're 100% invested, and some people might look at that and say, well, is that prudent?
No, I'll tell you, let me interrupt you right now. Okay. That is not recommended investment advice for everybody. Okay. Because I've been doing this now for 20 odd years, I've looked at the landscape, and of course I've missed a lot of the rallies in the Google and the FANGs and the NASDAQ and the Dow and everything else, but there's no question about it. I've missed investment opportunities along the way, including Bitcoin, which I have my suspicions about. But hey, if you're young and you're into this sort of thing, you can make a lot of money in this thing, and a lot of people have. So please don't say that this is not, they shouldn't be doing this. But the fact of the matter is, I remember Wheaton Precious Metals when it first went up for sale. I think it was in 1999 or 2000. I think I bought a whole bunch of stock at 90 cents. Okay, and I think I bought Pan American Silver for $2.25. That was back in 1999, 2000 when we were really at the bottom. So, I've still got those stocks today, so I'm doing okay. But that's a 20-year time span. So right now, we're looking at silver stocks. Silver equities right now are super depressed in price and are screaming buy as far as I'm concerned. And if you haven't invested in the precious metal stocks or in silver stocks, this would be a good time to dip your toe in the water. I would certainly recommend anybody doing that. Just put a small position in the silver stocks.
Now, with respect to that, I think it's interesting because I think a lot of the mainstream, investment advisors, and obviously, like you mentioned, it's not investment advice, and nothing we say on this channel is investment advice, and everyone should do their own research. One of the things that I think is interesting, though, is when they hear that someone is 100% in precious metals, that sounds imprudent and stuff like that. But the way that I look at it is, well, how much of your wealth do you want outside of precious metals? Because I think it's just this whole different way of thinking of the investment landscape when we consider that precious metals have been money for 6,000 years. So it's like that should be the first place. That should be seen as the safest place to put your wealth because it's had a 6,000 year track record of storing value.
There's no question that's the case. And if you take a look around us at everything else out there, whether it be stocks or bonds or cryptocurrencies or real estate or art or anything else or coins or everything else everything else out there, and the bond market especially, we're in the biggest hyper everything bubble the world has ever known in all of its recorded history. And there's no question in my mind that they can't print money forever. And this whole thing is going to come crashing down at some point. And as you said, gold and silver have been money for all of recorded history. And central banks have got vaults full of this stuff, and they're holding it on for a reason. So it would be very prudent for people to think that those that think that, well, gee whiz, there's nothing else to invest in except, the ancient money of kings, and that's gold. That's certainly what I would be doing right now, is looking at what we're looking at in the world as far as the financial situation goes today.
Now, at the beginning of this interview, you really made the case for silver. What is your perspective on gold as well, and kind of that argument between gold and silver?
Gold is the primary number one monetary asset. Let's face it. You don't see too many people following silver on the mainstream news or on the mainstream media, but it's always about gold, and rightfully so to a certain extent because it's the money of kings. But the reason that silver shouldn't be overlooked is because it has the largest short position in the COMEX futures market. And the percentage gains that we're going to see in gold versus the percentage gains we're going to see in silver, as Ted has pointed out on many occasions, is going to be astronomically different. So, I would advise people to invest some in both, but the gains are going to come mostly, the big gains, I'm talking about the big financial gains, are going to come in silver, the physical metal itself, and in the underlying precious metal that they rely on.
One of the reasons people are looking at silver right now is the gold-silver ratio being a 75-1 or somewhere around there, and it being historically high. Where do you see this ratio heading in the future?
A lot lower than it is now. Back when was it last year? What it got up to? 125 or 127 to 1. I can pretty much guarantee you we're never going to see that ratio again. And even at 75 to 1, it's very ridiculous. As Keith Neumeyer has pointed out, for First Majestic Silver has pointed out many times, silver comes out of the ground at a ratio about 8 to 1 for every ounce of gold. So for every ounce of gold is mined, there's 8 ounces of silver. So the mining ratio is 8 to 1. Will it ever reach that point? I don't know. There's no way of telling that for sure. But at 75 to 1, it is absolutely ludicrous. So silver is a screaming buy just based on the gold-silver ratio. And when we do get this price correction, or this price management scheme comes to an end, I can guarantee you that it's going to be a lot lower than that. It may not be 8 to 1, but it could be 10 to 1 or 15 to 1 or whatever. So just based on that, that's like 5 or 6 times your money.
When investing in precious metals, you mentioned how there's also the mining stocks. What is your perspective on, should people have the physical metal or the mining stocks or ETFs? Your perspective?
Starting out, if you were looking at this and say, okay, I'm going to buy some, the first thing I would do is I would put it in physical metal. I would go out and say, okay, fine, I'm going to put X number of dollars in the physical metal, get it in your hand. Because it's an asset which is nobody else's liability. So get some of that, and then go out and buy, for newbies who really don't know anything about the sector, I would just buy a good mutual fund or something like that has a range of stocks in it, like maybe 10 or 15 or 20 different mining companies. Don't try to rifle shoot this if you're a rookie. Just buy a general mutual fund like that. And as far as ETFs and buying silver and gold in them, that's fine. There's nothing wrong with that. I have a small portion of my portfolio in an ETF. I think it's in Sprott. But regardless of that, there's nothing wrong with these funds. But the fact of the matter is, I have a lot in physical metal because I want to be able to get my hands on it if things go sideways. But I'm not putting down ETFs at all. If you have a lot of money, I might suggest you put money in the physical metal and the stocks and in ETFs as well. So ETFs get a bad rap. I know SLV does from some quarters. I'm not one of them.
One of the things about owning precious metals is it's, for safety, and holding it in your hand is really a way that you can know that you have it, and that's really, really important, I think, at least for a portion of your holdings. But Ed Steer, we really appreciate your time today. Before we let you go, are there any last thoughts you'd like to leave with our viewers, and where can our viewers find you online?
The only comment I've made it before, and I'll make it a point, make the point again here right now, is, silver analyst Ted Butler is absolutely correct in how high the next price rally in silver and gold will go is entirely dependent on whether the large 4 and 8 traders decide to go back on the short side. If they don't decide to go back on the short side, and the signs are that they're not going to, then we're going to see a price rally for the ages. So that's all that matters going forward, is whether or not they go short on the next rally. But if they don't, then, like I said, we're going to see a rally in the precious metals that they're going to be writing about in the financial books for the next 1,000 years. And as far as reaching me, I think just Google my name, Ed Steer, S-T-E-E-R, Ed Steer Gold and Silver, and my website will pop up, and they can go to. I've got a free sample copy of what my column looks like, and they can click on that and read it. And if they're interested, they can sign up, and the cost is $100 US per year for about 260 columns. I write 5 days a week.
Ed Steer, once again, thank you so much for your time, and God bless.
And thank you for having me on, Elijah.
This week's special with Miles Franklin Precious Metal Investments. 2021 silver Krugerrands for only $365 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.